Good morning, everybody, and welcome to this week's weekly analysis session for Monday, 26th of October 2015. A quick apology to everybody who tried to register for the webinar over the course of the weekend. We had a little bit of technical dramas over the course of the weekend with our back end being down, and unfortunately the link didn't get sent out to everybody. And in our rush to try and get it fixed this morning, you may well have received a couple of errant emails. Apologies for that, but everything all in good order now. The website's up. Excuse me. The website is now up and running, and this recording will be available very, very soon. And I'll make sure that we get this posted as quickly as possible. All right, let's get underway. Certainly a little bit of material, a little bit of news coming out over the course of the weekend, particularly from the ECB and China. But first of all, our disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of the ETC presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, so again, today we'll go through the portfolio management, what's been happening in the markets, whether we've got any new setups in the US or in the local market, and what sort of setups there have been, any trades that have triggered, any stops that have been trialled along the way, any stop outs, and a bit of a portfolio review as we go through. First and foremost, very important to remember to be thinking about our levels of market risk. So it's something that we do once a week. It's the first thing we do before we lay eyes on the market, is check what the market risk is doing. Currently in the ASX, there hasn't been any change since last week. We are still in very high market risk mode, and as such we use a 20% market risk multiplier. There's been no significant change in the US at this point in time, although we are getting very, very close to moderate market risk. However, for the time being, we are still in high risk mode, and as such, we need to use a market risk multiplier of 40%. And again, if we are splitting our capital between the two markets, therefore 7.5% of your maximum allowable drawdown will be devoted to the Australian market. Applying a 20% market risk multiplier to that amount means that you have a VARP, a value at risk limit, across your portfolio of 1.5%. However, if you are trading in the US, the other 7.5% that you're able to allocate to that market, you need to apply a 40% market risk multiplier, and therefore that allows you to have 3% total value at risk across your US portfolio. Just to recap from last week, the macroeconomic session going out on Friday afternoon. At the time, the ECB hadn't met. There's certainly some discussions, on the Thursday night, Friday, ECB talking pretty much about that they are happy to do whatever it takes to keep the economies in the Eurozone ticking along. And then over the course of the weekend, we had China reducing interest rates there. So we've got a couple of obviously large economies around the world that are certainly trying to do whatever they can to keep the wheels turning. And next week on Cup Day, Melbourne Cup Day, our own RBA is meeting to discuss what they're going to do with interest rates as well. So certainly inflation in Australia, not something that's really on the horizon for the time being, given what the banks have put their interest rates up. There is talk that the RBA may think about dropping interest rates a little bit. I'm not too sure whether they're going to do that at this point in time, probably a little bit later on, but we'll just have to wait and see. There was an education session last week. During the academy, we did actually speak to the clients there and told them a little bit about some of the work we had been doing with Metastock, in particular asking the folks at Metastock to help program in not just the ETC scans, but also building in the price action filter, which is something that we haven't been able to get Beyond Charts to do for us. But as I said, the good folk at Metastock have been able to do that for us, and certainly it does cut down the amount of time required when looking for stocks with that really nice price action. Certainly from my point of view, I will continue to use Beyond Charts for the foreseeable future. I'm well versed with Beyond Charts. I like using it. I know where everything is. Metastock is something that's a little bit more difficult to use, but certainly a bit like anything, a bit like driving a car. The first time you step in, you're never too sure where the wipers are, and so it's just a matter of familiarisation with any new program. But certainly, David Seal will support everybody with Metastock, and I'll continue to do the same with Beyond Charts, and I'm happy to use Beyond Charts for the foreseeable future. All right, so let's go through and have a bit of a look at the markets. So we'll go and have a look at our market risk at the moment. So it seems a long time since the beginning of the year. We're getting more closer to the end of the year. Remembering our market had that really nice start to the year, and then really it all sort of started going pear-shaped in around about the middle of the year, and everything that we made, we've given back. More recently, despite the volatility overseas, and you can see that through here, you'll see that those of you who managed to catch up on the education session a couple of weeks ago, just putting on this percentage volatility indicator, and you can quite clearly see that that's way above its longer term average. But more recently, it's now started to dissipate the volatility, so the big range movement up and down has started to reduce. We're starting to get a little bit more direction now as well, and volatility subsiding. So at this point, we're coming up to test that longer term moving average. It'll be really interesting to see what happens when we get to that particular level. Certainly with all the talks of interest rate easing in some of the bigger economies, etc. And if it happens here in Australia with the RBA, then certainly that's going to be fuel for our particular market. You'll note that we are still in high risk territory as we speak. And again, remembering that the stochastic is a lagging indicator. It's slower than price action, but certainly our price action now really starting to take shape, which is a positive sign for our market. We go through and have a look at the US by comparison. For a considerable amount of time now, you might remember that I've drawn this box around what was largely a very dominant candle, and that was the one that we really needed to challenge, and that was the candle that basically had us falling out of this range-bound, sideways moving market. You'll see clearly over the course of the last couple of days in the US market, particularly on the Friday night, they're very bullish candle, gapping up, and really didn't even look back. Quite often when you get a gap up, you get a move back down to close the gap. In this particular instance, the market just kept going high. So very, very bullish signs there. We've now tested the midpoint of this candle. So that candle there now has been defeated, if you like, in Japanese historical sense. So now this candle is really sort of taking control. Other than that, the small candle above it is yet to be challenged, but the way the markets are going, that's going to be pretty much soon this week, and then really control then goes back over to the leading side of the index, which is a positive sign. And interestingly, we've now closed very strongly above our longer term moving average, so it's starting to look quite bullish over there in the US, and as a result, our market risk indicator is very, very close. You'll see on the right-hand side there, 59.98. We've only got to get to 60 from that point of view to therefore enter into moderate risk. So with a little bit of luck, we'll be there in the next day or two. So that's looking positive. So now let's go through and have a look at what pending trades we have for this particular week. Now, there was only 4 or 5 that came up from the scan results. Interesting to note that this week, the universe that I scan is just the Saxo US CFDs list. And from that list last week, there was over 300 results thrown out from the scan. So going through those over the course of the weekend, I was only able to find, I think, about 3 or 4 brand new ones. and a couple that are still valid from the previous week. So we'll go through and have a look at make sure that I'm at the top of the list, and then we'll work our way down one by one. So it looks like Beyond Charts is cooperating this morning, which is good. Advanced Auto Parts, AAP. Interesting to note that, towards the end of August, beginning of September, we had this big move down, and we were saying for a number of weeks afterwards that it was going to take quite a while until we started to see the development of our preferred mode of price action. It has. It's taken quite a number of weeks. And during that particular time, during all that volatility, we've had some stocks in the portfolio being stopped out, other stocks in the portfolio going sideways, and we've had a few that have continued to move up despite the downward direction of the overall market. Certainly the fact that the market's now coming back, it's starting to lift all ships, and we're starting to see the benefit of that in the watch list, and a number of stocks this week with trailed stops moving upwards and onwards, which is a positive sign. AAP, so first thing I want to do with this is just make sure that we've got the right price action. So we can see that we've now got a short-term uptrend in place, so therefore confirming the formation of a new medium-term trough. Where is that trough in relation to the second from last peak? It's well above it, so we've got the really nice strong price action. We've had good relative strength for a period of time, which is obviously a positive sign as well. This period of time through here, as the stock's been going sideways, a little bit of underperformance on the short term mainly, but as it started to pick up, then relative strength increasing along the way. So positive attributes for this particular stock. We just need to make sure that we certainly don't have any obstacles overhead. So if I just zoom out 100%, you can see that we're in blue sky territory. So we'll zoom back in and have a look at the structure of the trade. In this particular example, the last candle there has already passed that last medium-term peak. It's only gone a small way past, so obviously our rules are still valid in that when we're looking to take a breakout trade, rather than 2 pips above the medium-term peak, we are allowing ourselves, or the stock, a little bit of latitude, and that latitude is 0.5%. And so we're happy to get into the trade 0.5% above that last medium-term peak, and obviously with the limit to no more than 1% above that last medium-term peak. So basically we are giving it a window of opportunity in which to trigger. So 0.5% above that last medium-term peak, we'll have an on-stop order there at $195.58. A limit to 1% above that medium-term peak has the limit at $196.55. Our protective stop, remember, it still needs to be at least 2 ATRs away and at least 0.5% below that last medium-term trough where the arrow is. And as a result, basically you can see that the protective stop is a fair bit lower than that last medium-term trough, and that's a function of the ATRs on this particular stock. So that's Advanced Auto Parts, AAP. The next one, this was from the previous week, BGS. You'll see that last week's candle, nice tail on it, white bodied candle, so it's closing higher than where it opened. Just hasn't quite triggered yet. The on-stop order there at 37.96, and at this point we've got a high of 37.92, so getting very, very close to triggering. Hasn't occurred just yet, but certainly with a bit of follow through this particular week, I could certainly see that triggering. Interesting to note that this has had a long period of sideways movement, so really sort of basing out for a period of time, now testing the upper reaches of that particular sideways movement. So it's looking certainly very, very strong, and very good relative strength, really strong when the market was overall very, very weak. So that's BGS, and that was in there from last week. Very close to triggering, but not quite yet. CCE, this was one, Coca-Cola Enterprises, again, this was one from last week. Still hasn't triggered. Just a note on this one, it does have a fairly wide stop, but certainly continues to meet all the requirements in terms of our price action. And again, had a fair period of sideways movement. And again, you'll note the underperformance relative to the broader market, but certainly more recently producing some stronger relative strength when compared to the market. So that was one from the last week. Again, just noting that it does have a fairly wide stop on that one. But that's certainly one that meets the bill. And a new one for this week, Cube Smart. Let's go in reverse and see where we are. You'll see that we are in all-time highs. So we're blue sky, which is a nice place to be given what's been going on with the rest of the market. In terms of our price action, just zooming in, where is that last trough in comparison to the second from last medium-term peak? And we'll just go through and clarify all of that. So I might just have to move my annotation down. The low of that last medium-term trough at 26.89, and the high 26.81. So that last medium-term trough clear of that second from last medium-term peak, which is a positive sign. Again, remembering that the market's not allowing this stock to move back to these previous levels, these old points of supply, old resistance levels, now acting as future points of demand or support, a positive sign for the stock. The structure of the trade, we just need to place a non-stop order 0.5% above our last medium-term peak. So the high there, 28.16, 0.5% above that level, has a non-stop order at $28.30. A limit to 1% above the high of that medium-term peak has the limit at $28.44. Our protective stop, again, needs to be outside of 2 ATRs and at least 0.5% below that last medium-term trough, which it is, and the protective stop is at $26.14. That's Cube Smart, C-U-B-E. And the other one on the list this week, IntelliQuent, IQNT. Price action on this one, a little bit different, isn't it? If we just go through, I might get rid of some of those value lines there just to clear up the chart a little bit. Certainly in terms of where we are, we're at all-time highs, so again, it's a positive sign. Interesting candle, the one back here where we had certainly a big move upwards, some supply coming back in, but since then, certainly demand still being in the market, bidding the stock up. It's just coming back. It's having a bit of a rest. Last week, putting in a nice bullish candle. At this point, we've just got to clear past the high of this previous candle. So the wick of that particular candle there. Any supply that was there, we're interacting with that at the moment. So stripping out some of that supply every time we move back up to that level. In the absence of that supply being there, or rather the supply is still there and the demand is still there, if we're going to break through that level, then effectively what we're saying is that the demand pressure, if you like, is much greater than the supply pressure. And as a result, because of that increase in demand pressure above that level, if that's the case, then price has only one way to go, and that's to the upward side. So I'll just drag down our little annotation there. So as such, we just need to have an on-stop order 0.5% above that last medium-term peak. So as a result, our on-stop order comes in at 23.31 with the limit to 23.43. That's up to 1% above that last medium-term peak. Our protective stop in this particular case, it's outside of 2 ATRs, but it also needs to be at least 0.5% below that last medium-term trough. In this particular example, the 2 ATRs had us slightly above that last medium-term trough, so we need to defer to that trough, remembering that that trough is a point of demand. We also like to hide underneath that. level for a little bit of extra protection. And so that protective stop is now coming in at $19.85. That's IQNT. I think that's all we've got in the US. I'd be interested to see whether anybody was able to find any other stocks on their list. I note there, thanks John, that our good lady Effie, our admin support operations person, has been able to help you with getting your link to this morning's webinar. So thanks Effie, and thanks for mentioning that, John, along the way. Okay, at this point, doesn't appear to be any other stocks that people have found. If you've got one there or you're typing away, keep typing and we'll come back and have a little bit of a look later on. I think it might be a good opportunity to go through and have a look at some stocks that triggered last week. In the ASX, one stock that did trigger, in fact, let's go and pop it in now, CKF. You might remember we were talking about this last week, in that the stock code CKF, actually these guys also run the Kentucky Fried Chicken. Not that that says KFC, but it's just a anagram of KFC. Really nice strong candle last week, breaching that last medium-term peak. That's a little bit not unlike the setup that we had in the US stock on this one here, where we've got that that large range, if you like, with the wick on top, looking quite similar to that sort of setup as well. So certainly now that we've taken out that supply, the demand pressure there exceeding the supply pressure, and that's been triggered for this last particular week. And this is a stock that one of Jeff's from the Elite Investors Club that he's liked for a period of time as well. So that was one that triggered last week. We'll go through and have a look at the broader watch list in the Australian market there to see how things are going. Kay's typed in a GPN split, okay, and also given the PVV, would it be wise to sell half? Certainly, we can go through it. I might leave that one for the moment, Kay, and we'll come back. We'll just finish off with the Australian watch list, and then we'll go through and have a look at that for you. So, Capilano Honey, we've had a number of price volume volatility signals. So certainly, when you're up a significant amount, it is wise to take a little bit of money off the table when these events occur. And as you'll see, the price, once we've had these price volume volatility signals, can in fact retrace. So we've had that occur a couple of times. Last couple of weeks have been a pretty bearish on Capilano Honey. It just seems to be, and you can see the relative strength is just starting to taper off now. So hopefully those of you that have been in this have been able to benefit, taking some profit along the way, continuing to manage the other half of your positions, because you never know when this thing's going to turn around and start moving up again, and you can always re-add. Other stocks in the portfolio, Auckland International Airport. Last 2 weeks have been really bullish on this and really starting to drag that trailing 3 ATR up higher and higher. So nice performance there. And again, remembering, any of these stocks that are still in the portfolio have been exhibiting, very good relative strength despite broader market weakness. ARB, nice candle last week, looking really positive. BWP, nice candle last week, starting to move in the upwards direction. Still needs to do a little bit more work before it drags that trailing 3 ATR to the upward side. GHC, a bit of a nondescript week last week. Still got a little bit of work to do to regain some of its mojo. You'll just note that of recent, just declining in relative strength compared to the broader market. So just having a little bit of a pause there. GOZ finally putting in a nice white-bodied candle there. Still got a little bit of work to do. If we blend those two together, we do actually have a blended pin bar on GOZ, but it's still got a fair amount of work to do. You can see that our original stop there is really sort of acting as support on that one for the time being, and hopefully continues to do so while that regains a bit more strength. James Hardie, nice candle last week, and certainly if if we do get any interest rate cuts, then building stocks and those sorts of the like should benefit from that as well. So holding up well, and still got pretty good relative strength, all things being considered. Aurizon Holdings, this has really just struggled since it's been triggered in a number of months ago now. Really still not looking terribly flash at this point. It really needs to get a wriggle on. So it's been spoken to, and hopefully it'll do the right thing over the next few weeks. AHD, you can see that the trailing stop on this one is starting to move up again. Nice candle last week, and really right through this, quite a lot of white candles in comparison to the black candles. So really good relative strength there. I'll have to fix up my overlay there because you can see that the relative strength on the medium term there has disappeared, so I'll have to fix up that overlay, or that analysis rather. APE Eagers, a couple of pin bar candles the last few weeks. A strong week this week. Should just about start seeing that ATR start to move to the upward side as well. Certainly some price volume volatilities that have gone along, so hopefully an opportunity, if you've been in that, to take some part profits. MNF, a little bit like Aurizon, really just struggled the whole way through and sort of going nowhere, and you can see that through the relative strength as well, but it still remains, it's just got its head above water. BKL, it's had an interesting couple of weeks. The last, apart from last week, it really has been testing the market. It's had some big moves down and back up, and really, almost a doji here 3 weeks ago, last week, showing that there's certainly some strong interest in this stock down at the lows at around about the 125 level. Being tested a couple of times, and then last week putting in a very strong candle as well. So again, if you're in that, stay in it. There's absolutely no reason to be out of that. There has been a price volume volatility signal along the way, so an opportunity to take some part profits, and if you had have done that during those last couple of weeks, you would have been feeling a little bit better when it was certainly having a pullback. But since then, good candle last week, and absolutely nothing to do but just wait and watch and see where it gets to. That's the Australian watch list for the time being. Let's go through and have a look at some of the US ones as we speak. Okay, you had a question about GPN, so let's bring that one up. GPN, David, Global Payments, which are performing very nicely, going in the right direction there. And price volume volatility. So well done, Kay, for being aware of that, going off on that last candle. So certainly, given that in the initial setup of this, there was about $6.50 of risk on that particular stock. Given that it's moved from 107 all the way up to 133. You're now sitting at around about $26 up on around about a $6 or $7 risk. So you've made at that point around about 3 to 4 to 1. So certainly a good opportunity to take some part profits on that. I'll have to have a look into the split aspect of it, Kay, to see what's happened there, what the split is, whether it's a 2 for 1, 3 for 1, or whatever, and get back to you on that one. So I might do a bit of research on that one and perhaps just shoot you a quick email or give you a call on that. But certainly performing really, really well. Great relative strength. Certainly wasn't without a little bit of a pullback there, end of August, but since then really powering along very, very well. So that's one that's certainly done a very good job. What we might do is go to the top of the watch list. So what I might do is just go from the very beginning, the US Opens, and we'll go through and have a look at some of the ones in particular. ACGL just continues to moved nicely in the upwards direction. CTAS, a stock that has been going sideways for a period of time, just started in the last few weeks to put on some nice candles and just continuing to take that trailing 3 ATR that little bit higher during the course of the last week. FISV, again, nice strong candle last week, and again you can see there that it wasn't without its the volatility during late August, early September, but since then really starting to put in some nice price action. It didn't take too long for this one to start delivering that price action. Nice series of higher troughs, really nice candle last week. And again, when we first looked at the setup of this, plenty of room between that $80 level and up to 100. So that looks like it's certainly going to go close to getting up to 100, which would be great. MANH was another one with trailed stop. Again, really nice candle last week, and certainly in terms of initial risk, around about $6 initial risk on this one, and from there $52.50 now up getting close to $75. So again, that's it's taken a while to get there, and it hasn't been without its challenges along the way. But again, just being nice and patient, obeying our trade management rules has allowed us to be in a trade for a very long period of time. And that's really starting to look very, very strong. MANH. MTN. Before I have a look at that one as well, remembering this is a stock that was triggered all the way back in March of this year. So what are we? We're into almost the 11th month. So that's taken around about 8 months to go from around $52 up to around about $75. So that's getting close to around about 40% over the space of that time. You've just had to be patient to allow that to occur, but absolutely no reason to be out of that stock. So just reiterating the importance of trade management. We get so caught up with finessing of entries, etc. Your entries, whilst they are important, they're really secondary to good trade management. So, at the end of the day, your success is not going to be determined by, how well you nail your entries. It's really going to be what you do when you're actually in the trade. Are you going to stick with it and do the right things and be patient? And remember, sometimes your stocks are going to go sideways. Sometimes then all of a sudden they're going to, as the market rediscovers them, they're going to start moving onwards and upwards again. So, if you think about what the market has done over the course of the last 12 months, a number of stocks that have been in the portfolio for a significant amount of time are actually well ahead of the market. MTN, that last candle there, just dragging up that 3 ATR as well, so doing a good job there. NVR, this is one that triggered more recently. But again, a lot of nice white candles through here. Really nice candle last week. You might remember when we first got triggered in by that little doji candle, which is not always the best sign. But since then, it's regained some strength. It's now put in higher troughs. Really nice candle last week, and certainly moving in the right direction. So NVR, Starbucks. For those of you who like coffee, I don't particularly like Starbucks coffee. I don't think any of the American chains do very good coffee. Certainly a lot of volatility through that, really that black swan type of event back at the end of August. Really moving up very, very strongly now. And last week, really strong candle dragging that 3 ATR up as well. TSS, Total System Services. Again, a lot of nice white candles, and the last few weeks been very, very strong. Really good relative strength, and it has been for quite a period of time. So that continues to move upwards very nicely, and now comfortably sitting at least 2, getting close to 3 to 1 on that as we speak. Just put on the price volume volatilities. We had one back at that particular level at the close of that particular week. You would have been at that stage up around about 1 to 1, a little bit more than 1 to 1. So if you wanted to take a little bit off the table at that point, certainly you could have done so. But certainly up to your discretion as to whether you think that's worth taking some profit off at that point. But certainly continuing to move upwards and onwards and looking really, really strong. Very nice chart on that one. And WTM was the other one. And then we'll go through and have a quick look at the stocks that stopped out during the course of the week. WTM, again, putting in a nice high trough a couple of weeks ago. And this time last week we were looking at a candle that was a pin bar facing the other direction. Since then, it's finished off the week very, very strongly and starting to look really good again. Good relative strength on that last period, the last week, and dragging that trailing 3 ATR up as well. A couple of stop outs. There were 3 in the US. One of them was JAH, so we'll just have a look at that. As well, so in this particular example, our trailing 3 ATR had come up previously. We were just looking to see whether we were going to get a close below that. Fairly bearish week last week, and so that means a exit at market tonight, which means that we're going to end up with about pretty close to a 1R loss on this initial trade. Okay, so that's swings and roundabouts when we're using a trailing 3 ATR and we're using a rule to exit when price closes below. Certainly if you had chosen to exit when price hits the 3 ATR, you would have been out a number of weeks ago. But again, there's other stocks that we've looked at that you've been in lots of profit where prices come down, and if you had have used a hard stop, you would have been flicked out of some of those better trades as well. So it is swings and roundabouts. Certainly I think over the longer term, particularly in the lower volatile type of markets that we've talked about, that you're exiting on a close below will typically serve you a bit better than using a hard stop. So that was JAH. Another one was GII, or GII. Bring that one up and have a look. Since triggering, it had one price volume volatility signal, which at that point in time was around about a 30% return. So certainly an opportunity to take some profits along the way there. Price eventually closing below, meaning an exit at market tonight. So on the basis of that, you're still making net profit on the trade, which is good. Not quite one-to-one on the end result of the trade, but certainly making close to getting close to 2-to-1 on the initial price volume volatility exit, and a little bit better than break even on the remaining. So splitting those two, you're going to end up with a trade that's netted you around about 15%, a little bit more than that at the end of the day. So that's not too bad a result. And the other one was QLIC. And again, we've had earnings out in the US at the moment, so certainly that's having a big impact on what's going on with these particular stocks as well. So certainly last week, very bearish candle, closing below our trailing 3 ATR, which has come up and passed our initial 2 ATR based stop. So an exit at market tonight on QLIC. 2 for 1 on the split, says Kate. Okay, terrific. So you've got twice as many shares at half the price. Certainly, yeah, I mean, the opportunity there, if you haven't already done so, to take some profit on that one, because it has had the price volume volatility signal, and just wait and see what happens with the rest of it. Just continue to manage as per usual. All right, folks, any questions for this week? I'm mindful of the fact that we've probably got some of our audience that at this stage are waiting for the recording. But if there's no further questions, then we might call it for the morning and then get this posted so everybody can catch up. Hopefully the Australian market in particular continues to move in an upwards direction. Really interesting that despite the downward movement, that the Australian watch list has continued to hold up very well over the last 5 or 6 weeks, by comparison, there really haven't been too many stop outs at all. Now, obviously, the US watch list has a lot more stocks in it, but those that have been in the ASX, in the ASX market as your primary market, if you've had any of those stocks and you've been patient and stuck to your trading plan, then you should still have a portfolio that has a number of those stocks in it. And hopefully, now that the market is starting to move in the right direction, really adds to the strength of those stocks that have remained very, very strong, and that you continue to see some upward movement in those along the way. Right, folks, I'll go and get this posted, and we will catch up with you, if not at the education session, then at the same time next Monday morning. Thanks for listening, and bye for now.